spinning, and we're live.
Perfect.
There we
We're
go.
live.
Hello, everyone. We've got a special edition for you today. We've got the famous Cat Howard, Woodinville, famous
I'm liking my introductions, Dan.
author, local author, and oh yeah, and you're a realtor too.
Oh, there's that. I dilly dally a little bit in real estate, just on the side.
And we've
dominates my whole life.
We love it.
And we've got Jennifer Doe. Jennifer is with American Heritage Lending, and we're going to talk a little bit about what were we talking about? Short-term rentals and Airbnb.
Rentals, yes.
And financing those.
And
financing those. Absolutely. So it's a really fascinating subject, and let's jump into it.
Yes, perfect.
Oops. Let's jump into it. Hang on.
Hey, by the way, you guys, Dan is in charge of the slides.
Yes.
So I just want to make that clear. It's kind of like when I threw my daughter under the bus when she made the wrong turn into Highway 101 traffic, and I announced it on social media.
Exactly. Now, Dan, you have control of the slides, right?
Yes, I do.
Okay, perfect. Just jumping right in. Yeah. So today we're going to be talking about short-term rentals. These have become popular over the years with services like AirBNB, VRBO. There's a lot of other services around there, but we see a lot of these days in all around the country. A lot of coastal towns, vacation hubs. So they're very popular nowadays.
Yep. And let's go to the next slide. Okay.
Yes, short-term rentals. So the property types that we are able to do here at American Heritage Lending are single-family residences, planned unit developments, condos. We can do warrantable and non-warrantable, and I'll kind of go into that, and condotels. So our loan amounts are $75,000 to $1 million. On exception, we might be able to get you a little bit more. But that's usually the loan amount is what we're around. For our terms, we're at 30-year fixed loans, or we have 40-year fixed interest only loans, which is basically the first 10 years of your loan is going to be interest only, and the remaining 30 years is fully amortizing. So the total loan term is going to be 40 years.
Wow, that's pretty cool from a financial planning standpoint. So you could match up the revenues and the cash flows, basically.
Exactly.
Sorry to interrupt.
No, I'm going to interrupt too. So say that again. So the first 30 years.
Oh yeah, first
10 years they're interest only, and then the last 30 years are fully amortized.
Oh, yes. I love that.
Yeah, definitely. So it gives you, a chance if you want to just do an interest only loan, and you don't plan to keep the loan for 10 or 40 years, that's completely fine. Keep it for 5, and then you can refi out to a fully amortizing loan whenever you would like.
Right. That makes perfect sense in this environment because you got high interest rates now. Doing an interest only loan right now, and as rates come down, just refinance out of it. Right?
Exactly. Yeah. And it really does help for having a cash flowing property. If you want to have, a lower mortgage payment and you want your rents to cover that mortgage payment, once the rates do come down a little bit more, then you can refi to a, fully amortizing loan.
Right. So that's a big deal. It really is.
Yeah, definitely.
It's a beautiful feature. Okay, let's move along.
For sure. So I also wanted to talk about with, a lot of investors, they want to put these loans, they could put it in their individual name, or they could put it in a LLC or corporation as well. And properties in an LLC or corporation, the thing I like with us is that we do not report to your personal credit. So if somebody pulls a credit report for you, they will not see that property whatsoever if you don't want them to see it or know about it.
Oh, so cool. So this is sort of like a DSCR loan to a large extent. And so you don't have to report your personal income, and you don't need to report employment. So like if I'll throw out a scenario. Let's say you're retired, okay, and you got a chunk of money that's just sitting in your stock market account, right? And you want to reallocate, redeploy. move
Yeah.
some money out of the stock market into real estate, let's just say, you can do that with this loan. You don't have to worry about your income. Would that be correct?
Exactly. Yep, that's completely correct. We do not look at any income, for personal income from a job. You don't have to have a job whatsoever for these loans. So I'll go into a little bit of DSCR loans. DSCR stands for Debt Service Coverage Ratio. And the way that ratio is calculated, if you see the formula right there, it's your gross rents that you're getting, in this case, from your short-term rentals, over, you divide that by your total mortgage payment. If
Right.
that ratio is above 1, so say your rents that you're receiving are $3,000 a month and your mortgage payment is $2,500 a month, and that basically means you're cash flowing, which means you have a DSCR ratio above 1.
Right. Okay.
And then
Cool.
vice versa, if the mortgage payment is higher than your rents, then you're not cash flowing. And so your DSCR ratio is going to be below 1. So we can do people with credit scores starting at 640, up to 75 LTV, which means you would have to put 25% or more down. For short-term rentals, we do require that your property cash flows, but this is usually no issue because short-term rentals in general do get more rents than long-term rents. So
Right.
again, non-warrantable condos, those are basically condos that are not regulated or approved by Fannie Mae and Freddie Mac. So these are ones where you can have, a higher ratio of investor concentration, maybe the condo's going through litigation or anything like that. We can still do those. So that's also a highlight about us. Yeah. And then like Dan said, no personal income or employment needed.
Awesome.
Yeah.
Okay,
Awesome.
let's see here. So let's see here. Oh, I'm sorry, Jennifer. I'm stealing your thunder here. Sorry about that.
No worries. Jump in anytime.
Hey,
Yeah.
Jennifer, he does that to me all the time.
Oh my gosh, no worries. We're going to have to make you put a quarter in the jar every time, Dan.
That's right.
That's a good idea.
Oh, that's a
Jennifer
very
and I
good
would get
idea.
rich.
I know, we
Yes.
would be rich. A little side hustle for us all. Yeah. So
Okay.
I want to go over the guidelines for the types of investors that can qualify for this program, since that's one of the things I always like to, tell people about up front. If you can't qualify, then all the information before doesn't matter. So first thing, the borrower must show a history of owning and managing a minimum of 1 vacation rental over the last 12 months. There are exceptions to this that are granted, but the borrower has to have prior experience with long-term rental. So people who would not qualify are first-time investors, first-time home buyers, renters just looking for a property that they want a short-term rent, but they've never bought before. So I always like to make sure that they meet that experience guideline. And then ineligible properties would be, 2 to 4 units. So we only do just the single units.
Gotcha. Okay.
Yep. Awesome.
And we got to do a real quick check just to make sure the zone, the regulatory zone is the proper zoning, correct?
Exactly.
Just has to be zoned properly.
That's kind of like a soft guideline. If you do have a short-term rental in Aspen, or it's in Myrtle Beach, a section that's pretty common for short-term rentals, then we can always make that judgment call with our management.
Gotcha. Okay.
Perfect. All right. So purchase and refinance, I'm just going to go over a little bit how we calculate these. So number one, for the short-term rentals, we do look at a 12-month monthly statement or an annual statement provided by the online service. So say you have Airbnb or you have a property management company that takes care of these and collects the payments, then we will look at that to determine. And then in the event that the borrower owns a single rental property, bank statements with the deposits clearly identified as rental income can be substituted. So if you show us your bank statements and we're seeing deposits come in from Airbnb, VRBO, then we can use that to calculate. And then if 2 or more rental properties are owned, sometimes these all come in on the same statement. So we will ask for statements from that online service and we'll associate the rents to that specific property. And then for refinances, a lot of these times they are already marketed on Airbnb or VRBO. So we'll just need a little quick screenshot of that, and with documentation of future rentals booked. And then for seasonal rentals, say like Myrtle Beach, they're really hot rentals in the summer. So you must demonstrate that you have rental activity for those summer months.
Cool. Okay.
Yeah.
That makes perfect sense. I mean, these are not, they're not out of line guidelines. I mean, very normal stuff, very natural.
Yeah, we try to keep our underwriting guidelines pretty common sense. So, and if you make a good case for us, my VP she thinks like a salesperson. She's trying to make the loans work. So we've gotten by on a couple exceptions where they haven't quite met our guidelines, but she'll say, hey, it's still okay for us to do. The borrower is a great borrower, great FICO, great investor experience. So if it makes sense, we'll do it.
So it's a little bit case by case.
Yeah, definitely.
Love it.
Yeah.
Cool.
Perfect. Moving on to the purchases only. Properties not leased on a short-term basis must utilize a 1007. So what a 1007 is it's a comparable rental survey that the appraiser gives us. And we specifically ask them, hey, can you give us the estimated rents for short-term rentals in this area? And so they'll provide a one-page report that's saying this is what the estimated rents are. And that's what we use for our DSCR calculation. On purchases, of course, there hasn't been renters in the property yet. So we will use 75% of the expected short-term annual gross rent from that 1007. And then, or a 2-year rental history of rental income from 3 different comparable properties can be prepared by a third-party manager. If the appraiser somehow doesn't want to give us the short-term rents, we can use that 2-year rental income. And we'll use 75% of those gross rents.
Okay. Hey, Jennifer, real quick question. Let's say we're trying to figure out let's say you don't own any investment properties right now. Okay. So the path to get into these type of short-term rentals would basically be to purchase a regular investment property first, and then it's sort of a gateway into the short-term rental market. Do I got that correct?
Yeah. So we definitely do want you to have at least one rental property for at least 1 year prior to doing a short-term rental program with us. The guidelines say it has to be a short-term rental, that you are owning and managing. However, I have seen exceptions go by if perhaps it's a long-term rent. The only thing is we just don't want you to be a first-time investor.
Okay. So, okay. That makes sense.
Yeah.
Alrighty.
The long-term rents is case by case if you want to still do a short-term rental program.
Okay, so let's say you have somebody that has purchased a rental property, let's just say, and but strong borrowers, they're doing terrific, and then they take a look, they find another rental property a year later, right? Let's just say, but the other one was, let's just say, the regular old path.
Just long-term. Like a
regular investment property. Yeah. Can they go with you on this type of property? Is this something that they could do, even though they might have just a regular old rental on that they bought a year previous? Is that something you could look at on a case by case basis?
Yeah, definitely. I would say it is out of guidelines, so it does have to be by our first, but it definitely has a good chance of going through because they have that investor experience.
Okay. Just curious, that's all.
Yeah, definitely. All good questions. Yeah. So I went over non-mortgable condos a little bit. Condotels are also very popular. These are kind of like a hybrid between condominiums and hotels. So usually with these, you'll see a check-in, check-out desk and like key cards in the lobby. We do allow these. So the only stipulations with these ones are they have to have at least 500 square feet. We've given exceptions down to like 430 before if you have like a little smaller one. And what I like to say is you have to be able to make a Thanksgiving dinner in the kitchen. So it needs a full oven, 4-burner stove, refrigerator. So kitchenettes, unfortunately, we can't do.
I gotcha. Okay.
Yeah. So make me a Thanksgiving dinner in it, and you're good to go. Yeah.
And let's see here. So, a couple questions here on the frequently asked questions. It asks, are investors eligible for condo loans? Yeah, the answer is yes, obviously, right?
Yep.
500 square feet is the minimum square footage that needs to be met.
And no timeshares allowed.
No timeshares allowed. Okay, that's good to note. And then if the condo's in a commercial space,
yeah,
the condo. Okay, so the condo must have commercial space of less than 50%.
Exactly. So oftentimes, you'll see a condo project where it has like a Starbucks and like a restaurant below, and then the rest of the remaining buildings will have condos on top. Really convenient for the condo owners because they just have to walk downstairs to get their coffee, their lunch. We totally allow this as long as it's not.
Could you repeat that last part? As
long as the commercial space does not exceed 50%, then we're good to go.
Okay. Okay.
Yes. Yeah. And then down payments on a short-term rental, the minimum down payment is 25%. Borrowers with a 680 plus FICO can put 25% or more down. And then if the borrower's FICO is between 640 to 679, they must put 30% down.
Cool. Boy, you go down to a 640.
Yeah,
that's awesome.
Yep, definitely.
Excellent.
Yeah.
Oh, gosh.
Thank you. And yes, contact your loan officer, contact Kat. These would be great resources for you. And if they have any questions, I'll be happy to answer them on the back end.
Awesome.
Thanks, Jennifer.
Jennifer, thank you so much for coming on with us. That's so great.
Of course. It's been an absolute pleasure. And, I would love to do any other ones. If you guys have questions about any other products, we love creative financing and finding, a little bit more of a bigger box for those borrowers who don't qualify for conventional loans.
Cool.
Right on.
Thank you so much.
Thanks. Yeah.
Well, it's just about 5:00, and it's 5:00 somewhere, and it's 5:00 in Anaheim right now.
We did it.
We did it.
We did it.
Yay.
Well, let's see here.